Hello and welcome to Asking for a Trend. I'm Brooke DiPalma. For the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. A record day on Wall Street despite early losses. Stocks climb from lows after the Justice Department's criminal probe of Federal Reserve Chair Jay Powell jolted markets. We've got the top takeaways from the trading day. Plus, retail's big show. The National Retail Federation is hosting its annual conference in New York City. We're looking at everything from AI to GLP-1 drugs are changing how you shop at home. And the holiday season didn't bring gifts for all retailers. The early numbers show some mixed results as the consumer has been on edge. Well, we've got some early results from retailers showing a pretty mild holiday shopping season in Q4. Abercrombie and Fitch shares falling, sparking a sell-off in other apparel names like American Eagle after cutting the high end of its forecast. Meanwhile, Lululemon moving higher as it forecasts earnings near the higher end of its guidance, and Five Below raising its outlook, proving that consumers are still seeking value at discount stores. Joining me now is David Silverman, Fitch Ratings Senior Director of Corporates. David, thanks for joining us from the ICR conference. I appreciate your time. I do want to get to the first announcement here. Abercrombie really hit a stride back in December. Then we saw a stock off to a rough start this year after cutting that outlook. What do you make of what they had said today? And what does that mean for Abercrombie moving forward? Is their quick hot streak over?
Look, I think that company has continued to show growth. They've had a strong track record over the last couple of years. Fashion companies are going to ebb and flow over time. It's natural to see a fashion company in vogue for a period of time, and then for trends to moderate, potentially turn negative. We see that across the apparel space. Companies are always, as you say, or as I said, kind of ebbing and flowing. So the company's had great momentum. We'll see if they can keep it up over the next year or two.
Another one that got lots of attention is American Eagle. They said that their fourth quarter comp sales were actually up 8.5%, but it didn't seem like it was enough to persuade investors. What do you think this company needs to focus on moving forward to really win over the street?
Yeah, it's a tough one for me to answer in terms of managing those market expectations. I think what's been interesting is overall results, and we saw it this morning. Results continue to be pretty okay, across a lot of the discretionary space, despite the fact that we've seen strong growth across the consumer discretionary space over the last several years, and yet consumer sentiment and some indicators of consumer health continue to moderate. So. Frankly, just the fact that we continue to see positive results and growth out of a number of these mall-based retailers is to us in some ways a surprise.
David, one company that seems like we can't stop talking about is Lululemon, because even though it's up today, it came out with better than expected preliminary results here, saying that it's going to be at the higher end of their guidance as far as fourth quarter sales go. They're in the middle of this proxy fight with the founder. You also have a new CEO, stepping in after the search continues. What do you make of a name like Lululemon and really just the athleisure moment in time that they're up against as competitors really flow into that space as well?
Yeah, again, that company has had, I would say, somewhat of a first mover advantage in terms of the growth that they've seen. We've seen meaningful growth in the athleisure space. What's now happened, a couple of factors. Number one, the growth of athleisure overall has somewhat moderated. Consumers have filled their closets. They're also going back to the office and looking for other forms of dress. We've seen a number of other competitors kind of come into this athleisure space, and we've also seen Lululemon work on expanding their offering, which then puts them at competing with other types of retailers. So in part, it's what I noted before about to some extent the ebbs and flows of apparel segments and individual apparel brands.
David, something that I feel like I heard a million times in 2025 and now I'm hearing to kick off 2026 is the word value. And one of those players that were winners today is Five Below. It raised its outlook. What do you make of value moving into 2026? And will this K-shaped economy continue to persist?
Yes, value is absolutely in vogue. We've seen that kind of across the retail landscape. Value-oriented retailers, whether they're names like Five Below, whether they're off-price, whether they are a Walmart. Customers in somewhat of a tough economic environment are looking for value. That's likely to continue in 2026. We don't see significant improvement in the health of that kind of lower end consumer that's being much more choiceful based on cumulative inflation, concerns about unemployment, and other affordability issues. What we're watching out for is the other half of that, or the other side of that K, which is the upper end consumer, which has enjoyed the benefits of rising financial asset prices, rising housing prices over the last several years. So can that continue into 2026? Or does that become a new group of customers that we need to be concerned about?
David, I mentioned at the top, you're down in Orlando, you're at the ICR conference, tons of retailers and consumer brands gather there. Any emerging trends that you're seeing in day one down there?
I don't know that I would say that we see a lot of emerging trends. I think that individual companies are focused on their individual initiatives. There's not a lot of talk about the environment, and what that tells me as a trend is that the environment is quite difficult to read. Consumer sentiment, consumer health continues to be a bit challenged, but yet a lot of the numbers that we're seeing in terms of consumer spending aren't reflecting that challenge. The high-end consumer, which represents the bulk of consumer spending, is still performing well. And frankly, what we think that we're seeing is the American consumer likes to spend in spite of, or maybe because of, their declining sentiment. It's just what we do as Americans. We like to shop. And I think as we approach 2026, there are a lot of questions as to whether that relationship, declining sentiment, but okay retail results, whether that relationship can continue.
David Silverman of Fitch Ratings, I heard yesterday self-gifting is in, so to speak to that trend as well. Definitely seeing that. David Silverman, thank you so much for joining us.
Thank you.
Stick around, we got much more of Asking for a Trend still to come. The Dow and S&P 500 eke out records even as the Trump administration amps up a fight with the Fed. Here with the trading day takeaways is Yahoo Finance's Jared Blickery. Jared, we saw small, mid, and large cap stocks all rise to records even though we had all this noise.
Bullish on all sizes. Let's go through it because I haven't seen this in a while, and interesting study. I'm sure somebody will tell us the exact date this has happened before. Here's the S&P 500 today. Not a big gain, but that is a win. So we got the large caps, S&P 500. S&P 600, that's a small caps. Another small gain, so a win there, and that's also a record high. S&P 400. That is a mid caps and another record high. And I got one more for you. This is a bonus. The micro cap. So we don't have the micro cap index for the S&P, but we got this one, CRSP, US Micro Cap Index. So everything basically firing on all cylinders. And I'll just show you a quick year to date. The smaller you get, the bigger the returns are this year. And this is something that kind of started last year. So this is something I've been tracking. And it just shows you how much bullishness there is across the spectrum. So there is a lot of breadth right now. That doesn't necessarily mean that there isn't a concentration issue, but we have a lot of participation, Brooke.
Yeah, and up more than 5% year to date. Any standouts in today's market based on what you're seeing?
Bet. And so that leads me to the second point. Ooh. C is for chips. Now, let's go to the chip board first and then stick with me here because we're going to talk about chips in a different dynamic in just a second. This is my leaderboard, and these are a bunch of ETFs. I know this might be a lot of gobbledygook to some
Lots
people.
Of green I'm seeing.
Lots of green. This is year to date. And And you're going to see in the upper left, EWY, that is the South Korea ETF. And guess what they produce? Chips. So that is highly levered to the chip trade. That's up 12% in number one position. KWEB is China. That's kind of a surprise for me, but that's in number two. Then we got home builders. Then we got aerospace and defense. Then we got the stocks. Those are US chip stocks right there. That's up 10%. We take a look at the semiconductor board here. Forget NVIDIA for a second. That's kind of big. But look at some of these outperformers. SanDisk up 64%. Applied Materials up 55%. Lam Research up 30%. Western Digital 23%. And Micron up 21%. Now, you and I also spoke to Dan Newman, yes. Daniel Newman of Futurum Group today. This is a Stocks in Translation episode that is dropping early Tuesday morning. He talks a lot about technology, and the C for chips, that actually came from him. So let's listen to him break it down.
You know, the C in CES used to stand for consumer, but I think it's the chip show now. You had the big announcements coming out from NVIDIA and AMD, next generation rack scale, 2-ton systems that are going to be going in and building the future of this AI revolution. And, you know, taking a step back, I mean, look, we're getting these cycles, and, you know, 9 months, you said, is a long time. Mm-hmm. Well, every 6 months now, we're basically seeing the next wave of upgrades. We're seeing multiple cycles a year. We're seeing this race. It's an absolute arms race between the world's largest hyperscalers to build out the future. And they're all competing. They're competing on talent. They're competing on technology. And they're competing on, of course, building services that the market wants. But 2026 is really being set up as the year of monetization of AI.
Year of monetization. I don't know. Did you get anything out of that conversation? I mean, I got a lot. I don't want to put you on the spot there, but Dan Newman has a lot of insight, so I was really happy to participate.
Also, he really was looking at the next few years of how this is all sort of going to play out and roll out, and he has a lot of optimism about what could be the returns we see. Also, space. Don't discount space.
Yes, and we're going to be talking about that with a future guest, but that's not going to drop till next week. All right. I think we got a next one here.
Yep.
All right, so let's go to gold, silver, because those are once again hitting fresh record highs. And I'm going to go to our futures board here. We got another nice collection of symbols here. But in the upper left, if you could hit that, that's the silver futures right there. Just let me show you what's happened year to date. So
up nearly 7% today alone.
Yeah. 20% year to date, and we're what, 10 days in, 11 days in.
Right.
And if we show the trailing year, you're going to see
a tremendous
182% right there. Gold also hit another record high. Let's see, we got that right here. That's up 2%, and it keeps going and going. We had a little consolidation here, fresh breakout. We'll see how far this leg can travel.
Right. Lots to keep up on. Definitely precious metals, one to watch. Jared, thank you so much.
Thank
Appreciate
you.
your time. And stick around. We got much more of Asking for a Trend still to come. The National Retail Federation is hosting Retail's Big Show here in New York City, and I got the chance to attend the event and speak to experts about some of the biggest trends we're seeing arise in the retail space. The first, of course, being, well, you guessed it, AI. Google's Gemini announcing partnerships with Walmart as well as other retailers to roll out chatbots to help consumers shop. Here's what Dooley Rodrigo, KPMG U.S. sector leader for consumer and retail, had to say about this.
AI is going to be this transformational shift, and that's what you continue to hear today, and I think you'll continue to hear throughout this year. So what does that really mean is AI is really going to transform retail operations, right? It's going to transform the customer journey in terms of how we as consumers end up interacting with retailers. It's just not going to be us, it's going to be our agents with the retailer's agents. So that's a phenomenal sort of
middleman here.
Yeah, that retailers need to kind of figure out how does that agent-to-agent communication going to work out, right? But I do think AI is going to disrupt front, middle, and back office. We're going to hear lots of stories this week on how retailers are adopting AI.
Yeah, and we heard from Google Gemini today, or Google in general, that Google Gemini is teaming up with Walmart, with Target, Shopify. For consumers at the forefront, what does this mean for them? Will they be interacting differently? Will they even notice that this is happening?
I think consumers already are, right? So for example, consumers are using Gemini as a platform or ChatGPT, and they're starting to find ways that conversational AI is transitioning in terms of how they're purchasing things, right? So purchasing behavior and how how consumers are buying is going to continue to change this coming year. So they'll see some of that. What I don't think that they're seeing right now is the back end. How does machine language talk to each other, right?
Yeah.
How do these agents sort
Quite
of interact?
complicated.
And that, I think, is the infrastructure and the modeling that you continue to hear about how these companies are building these platforms that are going to enable that to be faster and much more tailored towards the consumer.
Now, the other big trend on the minds of retailers is the rise of GLP-1 weight loss drugs. Food companies have had to deal with changing eating habits, with popular lunch spots like Chipotle and Sweetgreen adding high-protein options to their menus. And now retailers are also looking to make changes as consumers adjust what they're buying while using these weight loss drugs. I spoke to Ali Furman, she's PwC U.S. Consumer Markets Industry Leader, about just that.
So I think 26 is the year where we're going to see an exponential increase in adoption of GLP-1s. Just between January and December of 25, we saw 9% of US consumer households have at least one GLP-1 user in January. It's up to 20% by December of 2025. That was before the oral pill form came out. The Novo Nordisk oral pill is now approved.
Yeah, just earlier this month.
Exactly. Eli Lilly's is in the pipeline going through the approval process. You're going to see more affordable versions of this drug. You're going to see more access, more patient access direct to consumer. So we're in the early innings and we've already seen adoption increase that much. So big implications on consumer spending. It's not just a decrease in spend. We see about 4% decrease in household spend with a GLP-1 user across many categories.
Are they just buying less food?
4 to 6% less food and grocery, food and beverage, less alcohol consumption, but a reallocation of spend in things like gym memberships or, travel, wellness, active-based vacations. They buy more athleisure. They buy smaller size clothing. They buy less accessories and more form-fitting clothing. So just overall shift in spend categories, tremendous opportunity for businesses to really hone in on this growing demographic and become a supportive destination to help them along their wellness journey.
So maybe a shift in the strategy for these retailers, but also these food companies as well.
Yeah, retailers, food, travel. We're even, seeing it show up in spaces like, I don't know, there's so many possible implications. Like, we talk about this drug as a physiological disruption akin to technological disruptions of our time, like the iPhone. When the iPhone came out, nobody expected Uber or Netflix streaming or TikTok. It's similar. People are feeling more self-confident and happier on these drugs. They talk about mental clarity, they're sleeping better. So there's broader societal implications to what this is going to mean as the population continues to grow that we can't even begin to fathom.
Wow.
There's certainly headwinds, but there's also tremendous opportunity.
And the final theme to watch for retailers in 2026 is the hunt for value. KPMG's Rodrigo telling me that, quote, consumers are going to continue to look for value regardless of which income cohort you're looking at, but they're willing to splurge if they feel like the quote unquote value is worth it. And that's what executives from the higher priced luxury brands Beyond Yoga, jewelry brand Missouri, and even, get this, diaper brand Coterie told Yahoo Finance on a panel. And that's a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4 p.m. Eastern for all the latest market-moving stories affecting your wallet.